Ooh, Two Steps from Hell. Not bad little band. They make a lot of probably one of the most famous, uh, apart from Hans Zimmer, right? Hans Zimmer does most of the stuff, but the big stuff anyway. But Two Steps from Hell is definitely a lot of their little uh, snippets get played in movie trailers. You just wouldn't know where they came from because they don't, say in the movie trailer, this is from Two Steps from Hell. Just over the top. Um, Epic classical. I love it. Though. I love it. It takes a certain type of composer to make that sort of music. It's not easy. Can't do that on a computer. Well, you can do the half of it. You can't get the orchestra in there. All right, so I'm back from a week off, boys. Big moves in the stock market while I was gone. So when I left, market was around about uh, 9.2, so it's up 700 points. 20,000 is it's 20,000 is obviously a huge target and a huge magnet from this point. So likely it does get tested. Definitely not this sort of trade I'm looking for as a trader. I don't look to buy this for the last 100 points just because it's high chance, aesthetically. And then selling it here is a little bit of a trap too. I mean, it easily could blow off the top, and we could be sitting here at 20,200 if Yellen comes out with a dovish hike tonight. Now, what we're going to be talking about today is this FOMC meeting and its impact, its likely impact going forward. Look, knowing Yellen, it is likely to be more of a dovish hike than a hawkish hike. Um, it would really surprise me if she came out all guns blazing, and if the members of the FOMC all got together and changed their rate hike schedule from two next year to say three, using their dot points. Now, if they did, then US dollar will get stronger. That's the clearest result. The result in the stock market isn't so clear. I suspect it would have a go at 20,000, but it's not the blowout of that. If it comes out dovish, if we're going to raise, but we're going to then sit back and wait and see what happens, be very cautious, and we've still got some underemployment, or just focus on some downside rather than some top side, not come across too over the top positive, then that's a more bullish result actually. But at these levels, anything can happen because the market's so overbought, so heavily invested into this story. It's very dangerous to be following the trend at these levels. So following the trend extends to the FX market. So buying the dollar yen, extremely dangerous up here. Extremely dangerous. You've got the sort of levels that are targets hit in 2 months, sort of targets that would be for, or since Trump won the election, only 1 month and a bit. Their sort of target is a yearly target, right? This is done in a month. So the potential for pullback or just range trading is very real. And a range has to be eked out by downside support, okay? And that sort of downside support, may not come in until 113, maybe even 111 in a bigger, broader range, all right? And it doesn't take much to get that happening. A dovish hike may very well lead to US dollar weakness. So the market's priced in a lot, and the Fed hasn't. So the Fed has to come to the markets. Yellen hasn't come across as hawkish. The Fed is actually priced in a fair bit, but we got to see the tone of Yellen basically. I don't know if she's going to react to questions about Trump specifically. I mean, I suppose they're going to ask her. They're going to ask her what's the Fed going to do if this huge infrastructure plan gets put through from Trump, and then her response is going to be, interesting. If she says nothing, or says, "Oh, we don't interfere in politics." I mean, it's still a big demand side boost. The government getting involved in that's going to affect the economy. Now, when that happens, then naturally you should see the inflation pick up, and you should see you should see rates increase like you have. Okay, but the yet rates have got a little bit ahead of themselves right now. So now they need the central bank to back up the market's movement, and that's the key thing here. So the market has told the central bank what it thinks about Trump. The central bank has to either update its economic outlook to be the same as the markets, or there will be some divergence, and that divergence will lead to volatility, and that's the sort of volatility we've got to try and play. Now, I'm still a buyer of the dollar yen on dips. I'll have a stab at 113 something. I'll have a stab definitely at 111. I'll get stopped out at 113 at 112.50 ish, or might, we'll see. But I'm not buying here. It's just way too high. And if it breaks 16 and everything's gun ho later tonight, then that just happens. So your dollar yen's the cleanest way to be trading in general at the moment. Some traders are selling up here. I'm not going to stop them. I suspect over time you will get a lower level than 115. But then again, you might want to just, where you put your stop. That's a hard point. There will be a tendency to go to war with the market as it gets more and more overbought, and that's a very dangerous situation to be in. Okay, that's one way good traders can lose money, is by selling into big rallies at overbought levels when the market remains overbought longer than you can remain solvent. Okay, that's the same in the stock market. There's lots of people selling the stock market at the moment thinking Trump's going to say something crazy. He may not say something crazy until March or February. The market can easily go to 21,000. Yeah, it can. What's going on, Potter? Potter, you're ranting, mate. 3 a.m. What are you doing here? Yeah, bought the Brexit drop. Yeah, I've got to try to do that stuff. I've got this thing, if the market drops 1,000 points, I like to have a little stab every now and again. I think that dropped 1,500 points that day. I didn't take a huge loss. I took a loss on the Brexit crash, not the Brexit flash crash. I had a position open that day, but that was something else. If that's what you're talking about, flash crashes can't do much to stop that, apart from have a stop. But yeah, this is different now. The market's settled down. You might get a more than 100-point move. I think it'd be unlikely. It would be to the downside, not the top side. Market's already priced in a lot. The downside will be if there's disappointment from the Fed in the language. So dovishness. Right now, the euro is maybe even a better way of playing that sort of US dollar weakness. And I mean, you shouldn't expect it to get to above 108 in such a play, but it might get up, above 107, 107.50. Selling in up there makes sense to me anyway. ECB came out surprisingly dovish last week. I wasn't here for your for the Friday or the update for you on the ECB, but basically they extended the QE longer than people expected, and they didn't taper as much. So, net result is more QE than the market had priced in. That being said, 105-ish is building a little bit of a base here. You better break it. You better break it in the next month, or there will be the reversal back towards 110. But I'm still going to be selling into rallies on the eventual probable break of that 105. The timing, I mean, there's no real reason to be long euro yet, right? It's not low enough, it's not cheap enough, and the divergence in the monetary policy hasn't come close enough to an end where you can start to be super smart about trying to pick bottoms. I think it's a mug's game just here. If we're 95, that's a different story. 95, it gets compelling if you want to counter trend and be a medium-term trader. But right now, I don't think you want to be playing that game. We'd be sitting here with the Fed raised 2 more times and the ECB still doing QE, and then you got yourself a situation, right? You got yourself a situation where we're below parity. Yeah, I'd be selling up towards that 107. I sold 107.50 last time. Um, I don't think we'll get 107.50 today. It would have to be ultra dovish and market just doing a massive short squeeze, bigger than everyone expected. Can happen. It's low liquidity time. December is not that many traders are in. A lot of traders are not trading right now. Right, they've taken the month off. Not the worst thing to do. If you're going to take 2 weeks off, then the 2 weeks coming are pretty much the best 2 weeks of the year. Get back into it early January. Start developing your Trump trade. But yeah, right now there's a lot less participants in the market. That's a two-headed shoulder. A reversey. Look, I think it's just bouncing off that 105ish area. I don't think this is really tradable. I mean, look, it makes sense to be tactically long here, in the sense of buy the rumor, sell sell the rumor, buy the fact for the trading day. Right, that happens so often that it's almost tradable. Especially recently, almost no event has gone the way that analysts have been telling you. So if they're telling you long US dollar because the Fed's raising, yeah, that's good while the market's falling. But as we come into the event, don't expect the US dollar just to surge. That's not a clean result that you can expect. Not. It's some sort of triple shoulder beast. That's what you're saying? I mean, that's what technical analysis will do, right? Oh, that's it bounces a few more times. They'll call it the octopus or octopus support. I mean, it's just a big level, and it's going to take something to break it. Yeah, it's going to take a hawkish Fed, a hawkish young. Once we break it, I don't even know where the downside is. Jesus, we're going to have to go to a monthly. Oof. Come on. I'm a parody, obviously. There's a bit of room here. Definitely a bit of room here. That's same with dollar yen if we're talking to the top side. Dollar yen has a fair bit of room to the top side too. I was talking to a couple of traders that think 150 is possible in the next couple of years. These are older traders too, people who've seen it. Big rallies. We'll see. We'll see how it plays out. I just want to buy the dip towards 110. If I get that, just be buying and holding, accumulating. It's been a while since I've done an accumulation trade. That's where you build up slowly with a swap on your favor. So it's like a carry trade. And a dollar yen is perfect for that. So buying dips and just trying to hold it to 120. Imagine if you can build up enough, build up 200,000 low, and it does run. That sort of thing will make your year as a trader. Could be the 2017 trade if you get in a good enough level. That and pound yen. Pound yen, if Brexit is soft, then the pound will actually outperform the US next year. So that's not a bad little trade idea as well. Yeah, buying dollar yen. I mean, just because I buy dollar yen every time doesn't mean I'm right when it rallies. Euro pound. Yeah, look, Euro pound's getting a fair bit of play. Now I want to sell, 86, 87. Okay, we may not get that. Now, there's no reason to be selling down here. Yeah, it's pretty strong. There is some reasons to remain dovish. maybe I just missed that ECB selling, and I'm bitter about it. But surely there's going to be some more volatility with the pound, and you're going to get an 85 at least going forward. But in general, yeah, in a soft Brexit scenario, the euro pound will be really a nice trade. And remember last year and the year before, we are just selling euro pound relentlessly on every rally, and that was really one of the biggest money makers for me for the last couple of years. So I'm keen to get back into that. I don't want to jump the gun here in relation to what's going on there. I want to make sure that soft Brexit is really in play, and it may not be, right? This is looking pretty nice. You're talking about the sell side, obviously, I think. Deepak. Deepak Pig. Sorry if I said your name wrong, mate. CAD Yen. I haven't looked at CAD Yen for a while, buddy. Sorry. Look, obviously CAD's outperforming everything because OPEC is so strong. But yeah, I'm not chasing up here. Same as dollar yen, right? Instead of buying dollar yen, though, you're buying CAD yen, so you want to pull back. Keep an eye on oil. If oil's remaining strong and there's no issues with compliance from the OPEC members, then you'll be looking to buy dips to 84, 85. Same as dollar yen at 112, 111. Bigger pullbacks. We haven't had a big pullback yet, and we always will. We always do. Even if it's not from 87 down to 84, it'll be from 90 down to 86. You know what I mean? Like there is no super rally that doesn't have the pullback. Just maybe the pullbacks later on. But you will get a 300 or 400 point pullback. That's when we look to come in, as long as nothing's dramatically changed, like a trade war with America and China. Pound yen's a little bit nicer, but that again, the pound yen has to have the pullback too. Same with like the euro pound. You're playing with fire, buying at high levels. The market is extremely neutral now in terms of the positioning, and so it's flushed out a lot of the shorts. And if they want to build up more short positions, it's not out of the woods just yet. It's just not looking as negative. But yeah, trend buyers, they're just not worried. They're keeping on buying. But that's not my style. I like good risk reward in my trade. So yeah, that's the so unfortunately Aussie's not doing anything. Aussie's ridiculously steady. Like I've never seen the Aussie this steady, and this is my main thing I trade, right? And it's like it's giving me nothing. I can't. It's untradeable. Basically, it's untradeable. You can't trade it right now. We've had a 400 point range. That's the big move, right? 400 pip. Before that, look at the range that we've had since July. 300 or 400 pips. That's nothing. There is a lot of interest to sell rallies. I'm in that camp. I'll be selling closer to 76. I suspect the path of least resistance is down, and the market's only being held up because of the huge Dow rally, Aussie yen rally, and oil rally. Without that, the fundamentals in China are not great. Fundamentals in the Australian economy are terrible, getting worse. And the divergence against US dollar is just too strong. So, yeah, unless something really changes in China, which, I mean, it's starting to get a little bit better. But, there's still so many risks there, and the Australian data has to improve a lot, and inflation has to come through. Then you can start to be more constructive on the Aussie, but otherwise just selling rallies seems to make me more money than buying dips, even though it has been relentless here. So looking to sell any sort of US dollar weakness tonight on a dovish Yellen, which is my base case anyway, right? She's going to be dovish. She's going to raise rates but be dovish, perceived as dovish. Well, less dovish than the market is priced in, and that will lead to US dollar weakness, especially on something like the Aussie if the stock market rallies. But then after everything's said and done, I like to sell into that. I suspect the stock rally won't last that much longer, and I suspect the big issues will be with China next year in America, and that won't end nicely. I don't think it's going to end nicely at all. Today, China said they're going to slap penalties on a US auto manufacturer. It's like, what? For what? For being monopolistic? I'm like, what? It hasn't really begun yet, but that's the sort of stuff that you might see more of. This is before Trump even gets into power, and we haven't heard exact rumors. That's just rumor stage now. So when we see the exact news come out, then we can see exactly. When it becomes a story that's talked about every day, then the markets react to it. Before, it's a story every day. It's not. It's just a potential story. This Chinese-US trade war. It's not a story yet, but it's worth a few hundred pips at least on the Aussie on the downside. Yeah, same for the Kiwi. Kiwi's a little bit stronger than the Aussie. Aussie Kiwi's grinding lower, looking like a sick puppy. It's my favourite long, right? Aussie Kiwi. But when you get the right levels, and I want it, I actually, because I'm not in, I want it to break parity. I want it to test parity, and then I'll be there. I'll be there, down there, building up long positions. That'll be another trade of the year for 2017. If you can buy the Aussie Kiwi below parity, that would just be ridiculous. Once in a generation sort of stuff. Just the end of the mining boom. Would be like, Daddy, why was Aussie Kiwi below parity? Like, that was the end of the commodity boom and the China crash, son. And also had a bit of a global milk shortage that year. That's the sort of stuff that's happening, right, to get the Aussie Kiwi so low. It really won't come around that often. So I'll be looking for that. Hopefully we can get that. But we'll go over that. If you look at its range, it's really quite low here. Yeah, this is going to have an almighty pullback. I don't know, at least 1,000 points. 1,000 points at some point. We'll see. We'll see when and why. And we'll talk about it when it happens. Alright, let's talk a bit more about FOMC, boys. Yeah, we're selling Aussie, even though technically it would be above its 200-day moving average. It'd be more just we're going to take advantage of the nice level. Renault. Alright, let's have a little look at what Deutsche Bank has for us. We might look at a couple today. Just the rate differential driving this, like the Aussie. What do you mean, US dollar strength in general? They're still around, Potter. Deutsche Bank didn't go under. I was wanting them to drag the whole world into the abyss, but they sort of just disappeared, didn't it? Same as Italian banks. They festered and then the wound healed. All right. Okay. Okay. They're taking a bit of a different tact. I haven't read this report today, actually. I was expecting that the market ended up being weak US dollar today. I did take a week off, boys. I did take a week off. I haven't been reading this stuff for the last. I mean, I haven't got the consensus from the analysts yet, which is important when you're sort of framing your mind. Can be like you can be contrarian, but it's good just to know what the view is out there. A cautious line, okay. So how can the cautious not be dovish? What are they saying here? All right. Nevertheless, says likely that the FOMC's willingness to entertain an acceleration in tightening. Yeah, maybe. Much must be considered generally alive. Yeah. So the pending fiscal stimulus, I suppose, is going to be interesting. Yeah. All right. We'll see. We'll see. I don't know. I mean, I just don't know how the market could be more ramped up US dollar right now than it is. So the dots should change, right? Should change to be slightly hawkish. I suspect any US dollar weakness will be bought quickly. Maybe that drop in the unemployment rate last day from NFP will get them a little bit excited. Yeah. But yeah, in the actual press conferences, I think where she's going to come across dovish. Perhaps there will be some comments about the US dollar strength. They don't usually talk about US dollar strength too much, though. Like all weakness, yeah. The Fed has tended to err dovish in most meetings this year. US dollar has been weaker versus the euro on every FOMC meeting decision since the December hike last year. Jesus. I didn't know that stat. Okay. Oh, these guys are ultra. I mean, not ultra, but they're very US dollar bullish. But they're talking the same sort of stuff. Selling the euro into 107s makes a lot of sense to me as well. I wonder how many other traders are thinking the same thing, though. That's how the market gets to 109, guys, right? When the market doesn't stop, people caught short, then they get squeezed and they cut. And the stops fuel the extra rally. I will remain US dollar long into the event via the US dollar index. That'll be my main way. Alright, let's have a look at another one. One sec, boys. A no rate hike would be 500 points on the euro high, 400 points on the dollar yen down. It's just not going to happen. Yeah. I can't imagine it happening. Now, last year, there was similar sort of expectations of a rate hike. Sorry, it was well supported. I was hanging out with my little niece and nephew, and they made me sick. I'm sure. Little grubs. So this is just going over what happened that day. All right. So last year, the US dollar began to weaken in the afternoon before the announcement, continued to weaken after the announcement, and then it strengthened for the rest of the day. All right. So that's Asian session, European session. Okay, so it's like you might see this, but because we do have a bigger US dollar long situation, I think that the chances of more US dollar weakness, for a longer period is likely, and then it goes back to US dollar buying afterwards. That would make more sense to me. In terms of event risk coming up straight after, it's the Australian unemployment numbers, like 5 hours later. So you can see here that the positioning is a little bit short-term more extreme, but the numbers here, I mean, it did get higher last year. It is slightly higher than the same period, but nothing too crazy. Yeah, so perhaps we are going to get this nice little relief rally. This is what happened on the day. This is last year, boys, last year. Alright, we might finish up with just some technicals. So I think everyone knows that the US dollar is quite strong into this. It's going to require a little bit more than just a hike to get more US dollar strength. It's going to have to be the dot plots which show what expectations are from all the members have to be ramped up a little bit more, and also Yellen has to come across as a little bit more hawkish for sustained US dollar rally. It's just hard to manufacture that without a hard-hitting headline, you can't really expect the bond market to go more ridiculous than it is already. So I would be watching for US dollar weakness as a natural reaction from the market, buying the rumor, selling the fact, and then I'll be looking to buy into that weakness at predefined levels, like 113 on the dollar yen, 107.50, 108 on the euro, 75.50 to 76 on the Aussie, selling into that rally. They're the sort of trades I'll be looking at for tonight. Alright guys, trade safe, don't go too ballistic pre-game. Just wait till we hear yelling, then we'll just make our moves tomorrow. But we, this sort of environment, we're not going to be too punchy anyway. And keep an eye on the stock market too, guys. Just keep an eye on the stock market. That's really important here. So see what happens at 20,000 on the Dow, 2,300 on the S&P. Alright guys, good luck. I'll be back tomorrow at 8 GMT, and we'll analyze what happened.